Hey everyone, I'm Scott Cunningham, aka Scottsy Business, and today we're going to be talking about renting versus buying a home and what should you be focused on? What makes the most sense at different ages, different points in your life? What are the questions to consider? What are the pros and cons? And then what am I actually doing myself and what I recommend? But mind you, none of this is financial advice. I'm not a realtor. I don't own a home. This is just what I'm doing. And you'll be able to see that lived out over the next couple of years or so to see if this really was the right choice. But I'd like to lay all this out and just share my thoughts on this and then hear from you guys as to what you think. I'm sure it'll be good to get a perspective from people who actually do own homes and hear from people all across the world in different geographical locations and get much needed insight on this ongoing debate. But I would like to share my thoughts first. Some questions to consider before you do start to go down these routes are where you want to live versus where you're willing to live, because it's going to make a big difference if you're willing to live in, say, Indonesia versus here in Canada, for example. It's about 3 times cheaper. So, your life can be drastically changed, especially if you're able to work remotely and continue earning, a Canadian income, but then I could move to, say, Indonesia. And I know a lot of crypto nomads who are very much appealed to that lifestyle, and a lot of people take advantage of that, whether it's crypto or otherwise. And then you have to consider things like, what age do you want to actually own your home or start the buying process? And are you willing to live with roommates and or rent out part of your property? I'm sure there's many, many more questions to consider and ask, but these are some base key questions at the beginning of this process to consider, because I know a lot of people will come up with things and they'll say, yeah, but it depends where you live, and it depends how old you are, and it depends if you're willing to live with roommates and not. So I'm just kind of covering those right off the bat before we actually get into everything. And before we dive into all the pros and cons and all that good stuff, inflation, taking a look at a rent and buy calculator, a quick word from my sponsor. A big thank you and shout out to my sponsor, Cake Wallet, which is an open source, non-custodial Bitcoin and Monero wallet that also has a built-in exchange. It's available on iOS and Android. All right, thanks again to my sponsor. So before we dive into the pros and cons, I do want to bring up this rent or buy calculator. And by no means is this like authoritative. This is just, a quick one that I could find. And I thought it was interesting just looking at different places around the world and looking at home costs for renting and buying. Typically, it seems to be a trend where buying becomes cheaper than renting after 5 years. So if you intend to live somewhere for less than 5 years, it may be more feasible to be renting. Whereas if you want to live there for a much longer period of time, it might be cheaper for you to actually just buy the house and pay down the mortgage. But again, you do still have to have that down payment. And that's one of the big things that we have to always consider. And since I'm going to be touching on inflation a lot during this talk, I guess it's important for us to also quickly look at shadow stats, inflation, to kind of just preface everything that we're going to be going through, because inflation is a very, very big, it has a big impact on the value of your home, on the value of your money, many, many different things. But what's most important, in my opinion, is the time it takes you to save up the down payment that you will require for the mortgage. And in that time, how much is your money being inflated away, and what is that going to do to your finances? Because if you're renting during that time, that makes the most sense, right? Because you're building up your wealth, you're getting enough to be able to afford this big down payment. But if you're just holding that money, if you just got it in your bank account, every year it is inflating away. And while the US currently says it's about 5% for inflation, and it's previously been much lower, I don't think that's really accurate. It makes sense for them to under-exaggerate. B, we saw in the last year and a half or so, it was like 25 to 30% of all US dollars were printed. So just logical common sense would lead you to believe that it has to be higher than 5%, because you can't just have inflation 5 times less than the amount of money you're printing, because that's what inflation is supposed to be. It's just the difference in value based on when you're inflating the money, right? So unless you have, heroic economic gains, inflation is just going to really take a chunk out of the economy, and it's going to affect you the most as the person who's got your money invested in fiat, and it's just getting inflated away. So this says, this is Shadow Stats, by the way. It gives you a more accurate analysis and a little less bias to just be taking their word from the Federal Reserve or from the government. And I still think this is low, but let's assume it's 9%, right? And I have a little scenario to share where here it is, where I've calculated it. Let's assume 9% is what we're going to go with. And let's just say it's like that for the next few years. And again, I still think this is a generously low estimate, but this is just as a for instance. So if we do this for 5 years and you're making $50,000 a year, which is pretty modest, right? We're going with a very average, very modest budget. And you're very, very frugal. Say you're saving 50% because, I can save 70%. So let's just say 50, right? I don't think you will save 50. Most people will not save 50%, but let's just say that's the case. After 5 years, you would have normally had $125,000, but because of inflation, you've lost almost $32,000 to inflation. So by not investing your money and just saving because you thought it was a good idea to save for your down payment, you've lost 26% of your total wealth. And again, this should be scary, but if you're not very taken aback by that, that means that 25% of the time you spent working last year or, the whole time for these 5 years, 25% of that is gone. All that money, all that time. So 1.25 years of work is just gone. Like, that didn't happen. You worked 450 days or whatever, and that's just completely nothing. As if you did that for free. That should piss people off and get people like motivated to be like, oh, okay, like what is this? Like, how do we deal with this? What do we do? Investing your money to build, appreciate, get dividends, etc. Just trying to beat inflation, or in crypto and like going for the growth play and like really beating inflation, because in certain cases like Bitcoin, it's trying to be hedged against inflation, many different things. But the point is that you will lose a ridiculous amount of money, and that's just 5 years of saving. Obviously, you will not be able to afford a down payment with $125,000 or $93,000. So say it takes 5 to 10 years, say it takes 15 years, and that's just the beginning for the down payment. And then you've got to go and you got to spend 10 to 30 years, say, paying down the mortgage. It's going to take a good chunk of your life to do this. This is like something that you have to lock in for the majority of your life. Like, you better be prepared to live here forever. Lots and lots of things, which gives a little bit, it kind of gives away a bit my opinion on the situation, but I will reveal my exact recommendation / what I'm doing at the very end. I think that's just really important to get all that out of the way before I start to go through the actual pros and cons. So for renting, the first pro is that you don't have to save a huge amount of money for the down payment, as I've just kind of gone through. You can invest that money and avoid losing your wealth to inflation, which we more or less just covered. You have the freedom to move and live anywhere without being tied down geographically. This is very good because you've got that freedom. As I talked about at the beginning as well, you could pursue a digital nomad lifestyle. Getting rid of roommates and changing your living situation is much easier. For example, if I'm living in a house and I've got roommates living with me and they don't want to leave, then you have to go through a very lengthy and costly eviction process. Whereas if you're just living with someone, you can just leave. You can switch roommates. You can do a lot of different things. You could sublet, lots of stuff. You can't leave the house. You have to get them to leave if you own it. In terms of, the property's value, dealing with the property, anything administrative or legal related to the property, you don't have to worry about any of that stuff as a renter. And it generally tends to be cheaper, at least in the first 5 years, to be renting versus buying. Now, when we're talking about cons, well, you can't easily make modifications to the property, so it's not going to be your dream home. You're not going to repaint the whole place. You're not going to, you're not going to invest in this. You're not going to build the backyard or finish the basement. You're not going to make modifications, more or less, because either it's to the benefit of your landlord, and like you have to live in the place while it's being worked on, and then you don't get the benefit of actually having that improved value or anything. It's just, it's not very good as a renter in that sense. You have a lack of certainty and stability that you will being able to keep renting the place because, they could end the lease, they could sell it. There's a lot of different things that can happen. And the biggest con to renting that most people will point out is that you are paying for someone else's mortgage. You're not building equity. The rent that you are paying is going into someone else's mortgage, and it's helping them build equity in their assets. And for you, nothing is happening at all. You're just losing money, and you could be owning a home and putting money into equity yourself. So that's a pretty big deal. Now, when we're talking about buying, for pros, you will own the house, right? You will have a huge amount of peace and less stress and everything. You've got a house, it's yours, just very, very good sense of peace and calm in that, in not having to worry about a lot of the things like I was saying, certainty, stability, all those kinds of things. Ideally, your real estate will appreciate a pretty good amount in value. So once you actually are paying it off, real estate typically performs very, very well in terms of price appreciation. And typically you will see a very, very good ROI on that property. Your rent payments, what you would otherwise be spending on rent, will now go towards building equity. So you're building up that asset, and you're actually, you're in a way keeping some of that money that you're spending. It's not just going to someone else. And you can also sometimes get tax benefits for owning your home, especially for first-time buyers. There's also tax deferrals and a lot of different tax benefits that you can get when you're selling a home and switching to a bigger home. A lot of different things that can benefit you from doing that. So that's definitely important to keep in mind. But I also feel that there's a lot more cons to owning a house. For example, you need a massive amount of money saved to afford the down payment to get a reasonable mortgage. As I've already explained, this is going to prevent you from being able to invest in different opportunities. Your money will be inflating away. Many, many things. Housing prices are currently at all-time highs, which could be good in that they're going to keep rising, but it could also pull back, and you could actually potentially lose money. Houses don't always go up in value. Sometimes they also go down in value. Not that any asset you would invest in is somehow protected from this, but this is more so just comparing renting versus buying. Now, you have to pay homeowners insurance. You have to pay for maintenance of the home. You have to pay property tax. Say you own a condominium. You have to pay for yard maintenance. You have to pay for shoveling. You have to pay for salting. All the different things that normally you would just do. But if you lived in like a condominium, that would be paid for directly by the owner. So that is also something to keep in mind. And that might just be added to your rent if you're a renter as well. But there are a lot of different fees associated with owning a home. So those are important to keep in mind. You will also pay a very, very large amount of interest on the mortgage. A lot of people are like, yeah, you're building equity and that's great, but you're also paying out money that is not going to anyone in this in the sense of interest. So in the same way that me renting is giving money just to my landlord and it's not going into my assets, so is the interest paid on the mortgage. That's not really going into your home's value. That's just going to the bank. That is also money that is just not going into equity. That's just nothing. That's wasted, right? So you're paying more fees in that sense. That makes it more of a liability. I mean, people say, you can rent out rooms to your roommates. You can do a lot of different things. Those are the questions that I did mention to consider at the beginning. Your ability to move or travel will be greatly limited, and you will have to potentially deal with things like bad neighbors, a bad neighborhood, lots of different things that could happen over time, right? You can't just move away from your neighbors you don't like. You would have to sell your home and all this stuff that would have to go into it. And if people somehow noticed your neighbors were terrible, like they were very, very messy or whatever, then it would also be harder to sell the home. And then, as I mentioned, traveling will be very, very limited, at least not necessarily traveling in the sense of like just taking a vacation. But if you're renting, for example, you could stop renting, put everything in a storage unit, and you could go traveling the world for years if you wanted. But in terms of moving, yes, it's going to be much more challenging to sell your home and then buy a home in a new place, especially if you want to like move into a different country, for example, than it would just be to rent and do temporary living situations. In terms of renting out part of your home, this is good, but it is much more challenging to evict tenants or change up your living situation as a landlord, because there's a lot more legal obstacles, as I was mentioning previously. Real estate is very illiquid, so yes, it's very hard to easily get that money. If you really needed the money that was in your home, people do, they take out home equity loans. There's different ways to do this, but it is very illiquid. You need to find, and kind of aligned with that, you need to find the right home to buy, and you need someone who wants to buy your home to actually be able to sell. And that is kind of just based on the illiquidity, but it's a very specifically mentioning that no one is going to buy your home if it's a terrible mess. So you do need someone who wants to actually buy your home. So you do have to put in a lot of work to make it buy worthy and actually attractive to a buyer, and a lot of other things, right? Because I mean, your house might just be terrible too, and even if you try to make it attractive, you still might not have a buyer, or you want too much money, or there's a whole host of things. You could have a one-off event that could massively impact your home's value and people's willingness to buy it. Say a volcano erupts, a more obvious natural disaster like a hurricane, and it just lowers the value of everything in the area. There's a lot of different things. An animal on the verge of extinction decides to nest in your backyard, and the government wants to take the property from you and give you, a measly offer or just market value or whatever. Someone dies in your home or something that impacts the value. There's a lot of things that can lower the value of your house that people don't really consider. But that's a small one. That's not really going to really weigh into your decision making basis. But it is, it is something to potentially consider that it's possible. And then there's additional cost to selling and buying, like inspections, realtor fees, stuff like that. So again, it is still going to be cheaper to buy the home after 5 years if you plan to live more than 5 years, not after 5 years, but you plan to live more than 5 years in a place. If you basically just plan to live there forever, it might be cheaper. It might make more sense and be cheaper to buy your home. But again, that's when you have the down payment. As I've already explained, that's not a really good situation unless you have the down payment. So here's the thing. That's the pros and cons. This is what I'm doing, and this is what I think makes the most sense. If you already have the down payment, sure, buy the house, but you already made the mistake presumably, of just saving your money and having it decimated by inflation. What makes more sense is to rent, in my opinion, is to rent and to invest all of your income coming in that you can possibly save. For me, I've aimed to save 65% or more because I want to retire very quickly. And I put all of that into investments. Now, you could do this slowly over 10 years and probably be good in like safe dividend stocks. But I'm trying to aim more for 5 years, doing some of that, but mostly growth cryptocurrency investing. So my idea now is more of a 5-year run to try to get from basically zero to at least enough to buy a house, or if I do really well, to retire on about $1 million paying worth of dividend paying stocks, and then have about 5% yield. So about $50,000 a year passively would be enough to not only pay for all of my expenses, but also afford, well, maybe not the down payment. I would have to also figure that out, but that would be enough money coming in income to also pay for the mortgage, all of the fees, and start building the equity in the home. But that's after I've already covered all my expenses. I'm retired. I don't have to work anymore. That's, very late game. The house in my strategy comes last. So if you take the next 5 years or so to invest, and people say, yeah, but you can't build up that much in 5 years. Well, here's the thing too. If you're saving up money your whole life and then you get a house and then you start trying to learn how to invest after like 30 or 40 years, well, I mean, you've already missed a lot of the opportunity and for appreciation and everything that you could have done with investing. And you missed your prime years to actually learn about these things. The younger you start learning anything, the better you are at it. So, you probably are better to learn investing first and then getting into home ownership, because you're not really learning much about home ownership over the 30 years that you pay a mortgage, right? You're probably learning most of that very quickly. But if all of your money is only going into the mortgage, then you have no money to learn investing, to actually build wealth otherwise. So again, I still think it makes more sense to be investing your money. Over the past 2 years, less than 2 years, I've turned $5,000 into over $200,000. It was $300,000 and then back down to $210 on my last update. But if I can continue at this rate, easily have $1 million in less than 10 years, like without a doubt in my mind. I'm trying to have $1 million in less than 5 years. So that's the goal. And if I do that, then I actually prove exactly that my renting in that 5-year span was cheaper. It was better to do it within that 5 years, made the money to buy the house outright. And then you can just buy the house and then just live in it and go from there, versus spending, 20 to 40 years getting the down payment, paying towards the house, actually owning the house. I think just in principle, it's going to be much more effective and faster to be able to just invest, build up your wealth, and then be able to get the house. But a lot of this is still going to come down to how much you're willing to save, invest, all that kind of stuff. For me, it's been about living as close to my means as possible, living like dirt. I live with a bunch of roommates. I don't have a car. I just invest everything. In my last year, it was about 70% of my income, maybe 70.65 or something like that was invested. I'm always trying to do at least 65%. And currently I'm more or less aligned to do the same thing this year. All that money goes into investing. All that money keeps growing. It's growing. It's growing. It's not losing to inflation. Instead, it is growing in value, so that once I get to the point where I have the down payment, I can then buy the house. Again, I do think it is a kind of a silly comparison to be like, okay, well, I've got $1 million or I've got hundreds of thousands of dollars. It's like, should I just be renting for the sake of renting? If you're good at investing, then yeah, probably. So if you've got that money, it actually might make more sense for you to buy a house, because I mean, you shouldn't have really been just saving that money up to get that down payment, but maybe you inherited money, maybe you won the lottery, maybe you decided you wanted to liquidate your entire stock portfolio. Whatever it is, if you've got the money, go for it. But if you don't have the money and you're looking at this like an introduction to renting versus buying, I think it always makes more sense to just be building up your wealth, investing your money, without trying to get caught up in this trap of like, oh, it's so important to own your home, and owning a home is a part of the like life plan that you need to be done with very, very early on in life, because then people get trapped up in their mortgages that they're stuck in for the rest of their life. And they want to move, they want to do lots of different things, they want to try out investments, they want to try out opportunities, and all of that is stifled by this commitment that they made 10, 20, 30 years ago. I think it's great to build up equity, but at the end of the day, it's typically how you get to the spot where you buy the house that everyone does it wrong. And that is why I generally say renting makes more sense. Because again, if you have $200,000 because you spent the last 10 years saving your money, you already made all the mistakes that I'm saying that you need to avoid. Inflation is so impactful. You need to be investing to combat inflation. And if anything, this isn't even a discussion about renting or buying a home. It's simply about what you need to do about saving your money and what you need to do about investing and how to deal with inflation. The decision to actually buy or rent the home really just comes down to how much money you have for the down payment now. And I guess also how much money you're actually making in terms of income to be able to afford that house. But personally, I think the best way to go about it is to just invest, because now I also have the option to just, if I do get that money, I could just invest it into dividends and then just live passively off of that income. I could still keep renting. I could buy whatever I want to do. It's going to be covered by the investments. And at the end of the day, way more people are going to be enticed by the idea that you don't have to work anymore. You can live passively off of the income that you've generated over the years. That sounds much more enjoyable to me than working for 30, 40 years to pay off a mortgage and just having that crippling debt over your head all the time, always weighing down on you. My parents just paid off their mortgage, and they're getting close to 60 now. So I do not want to be 60 years old when I pay off my mortgage. I would like to not have a mortgage because I avoided paying any interest at all, because I don't want to give away money for no reason. And again, while people might say, but the appreciation of your home and the value, it's going up so much. But am I really going to be able to extract that? And do I want to? Like, do I want to take out an equity loan on my house to invest in Bitcoin? Not really. And you have to kind of start from scratch then from your finances, unless you start renting out your home and things like that. Personally, I would not want to buy a home and spend 20 years paying it off just to rent it out to people, or rely on the fact that like my buddies are going to live with me for the rest of their lives. So like, I think it's much more realistic to go the route that I'm going. Not that there's anything wrong with, dedicating your life to investing in a house, but I've always subscribed to the idea that not having any funds available to invest in different opportunities and do different things, especially when you're young and you can actually take these risks, I think that is a big miss. And I'm sure we'll all see in the next few years how this actually plays out, how I've actually done this, because everything that I do with my channel is to lay out the groundwork, the framework, so that you can retire in 10 years or less as well, earn money from crypto, and just generally set up your finances in the best way possible. So this is what I'm doing. Again, none of this is financial advice. This is my take on buying versus renting. I would love to hear from you guys. What makes the most sense to you? I know a lot of you are actually leaning more towards buying, at least from the initial comments I was seeing. But I think people were they were addressing this question. They weren't thinking about like, oh, but like, what about the amount of time I have to put into getting the down payment and all these different things? And because I think realistically, most people don't just have $200,000 to put into a down payment. I'm pretty sure the average American cannot afford a $1,000 emergency expense. So there's no way that they have money to afford a house. So for the average person that is going to see this video who isn't, pretty well set up in their life, the average person probably is not going to be in that situation. And they're looking, how am I possibly going to buy a house with, $10,000 in the bank? $10,000 in the bank is the perfect place to start investing instead. I started at $5,000 and it's been amazing for me. That is just my experience. But had I been paying down a mortgage or something during COVID, I would have missed every opportunity that was there and would have been really unfortunate. So I'm glad that I made the decisions I made. They've played out very, very well. I'm making an amazing return on my investment. I'd love to hear what you guys are doing, though. Let me know in the comments below. What makes more sense? What are you doing? And what's the best way to invest? Is it stocks? Is it crypto? Is it real estate? There's a lot of things you can do. I do think renting out real estate is a very, very great way to build wealth. And I do plan on doing that in the future. But again, that is a very intermediate tactic. I think first you want to start building off your investment portfolio and go from there. But let me know in the comments below. If you did watch to the very end, make sure to comment #1ham in the comments below so that I know you watched to the very end. Thank you so much for watching. I'm Scott Cunningham, aka Scottsy Business, signing off. Cheers.